In 2021, house prices rose by more than 10% throughout the whole country. This has taken prices to an all-time high. However, demand continues to outstrip supply, but more importantly, inflation is also officially running up more than 5%. This is a 10-year high, and this could completely change what's going to happen in 2022. If you're watching my videos for the first time, my name is Saj Hussain, and on this channel I share with you my 15 years of property investing experience to ultimately help you get further faster in your own property investing journey. Before we talk about what's going to happen in 2022, let's take a few moments to understand what's created the situation that we're in right now. In 2020, as the country started going into lockdown, many of the lenders started to panic, as was everybody else, and what they did, they started to withdraw some of their products and making it much more difficult for borrowers to be able to borrow money, and the rates that were available were much higher. This is really because nobody really understood what was going to happen in the marketplace and how long this was going to last. During the time people were locked down in their homes, they weren't out, they weren't really spending money as they would normally in an ordinary fashion. And also the government was introducing support for individuals, for businesses, be it bounce back loans, grants, furlough schemes. All of these things were putting money into the economy, into businesses, into people's pockets, but people weren't spending in the same way. As the country started to come out of lockdowns, people had time to reflect on being locked up in their homes and maybe thinking about needing more space. Some people working from home and maybe used to the idea of working from home, and people were thinking about maybe moving, along with the pent-up demand that had been there because there was a period of inactivity in the marketplace. So all these people were now in the marketplace looking for property. And of course, there's very little property available because people are still uncomfortable at having strangers walk through their homes, looking at their property, particularly with everything that was going on. So when you combine all these things and put them into the pot, put them into the mix, what we saw was there was a surge, a spike in the demand for property. However, there's very little property available for sale. And of course, this started to really push up prices. House prices are very sensitive to supply and demand. So as people started coming out of lockdown and more people were viewing property, but there were fewer properties available on the market to look at, what happened, that restricted demand started causing prices to go up. But at the same time, the government was becoming very concerned that the economy overall might run into a recession, and that's something they really wanted to avoid. And of course, property has a big impact in terms of overall what's going on in the economy, and the government ultimately control and dictate how the property market's going to work. Now, not everybody is of that belief, but I certainly am, because there's a number of things they can quite easily do to either push prices up or to drive prices right down. In the first instance, what the government started to do was create more money, either through quantitative easing or, in more simpler terms, switched on that printer over there and started printing £20 notes, just so that there's more money in the economy. And ultimately what that meant was that there was more money available for businesses, more money available for individuals, but of course people weren't going out, they weren't spending as much money as they were ordinarily. I remember at one point in 2021 reading an article where it said there was more money sitting in people's bank accounts than at any time ever in history. I think it was a nationwide report, but effectively what they were saying, that people are sitting on plenty of cash right now. As people are coming out of lockdown and starting to spend money, there's more money available to be able to go and buy property, for example. Coupled with the fact that people had more money in their pockets and interest rates were the lowest that they had ever been, it meant it was easy to be able to borrow money to be able to buy property. And then what the government did, it introduced a stamp duty holiday because they're trying to stimulate the property market at that time, because they certainly didn't want it to crash out. And remember, all these things were happening around the same sort of time. And further to that, they added into the mix the 95% mortgages, which are partially guaranteed by the government. Ultimately, what that meant was it really drove up demand for property. As I mentioned earlier, property prices are really sensitive to supply and demand. Because there's a huge demand and a restricted supply, that's what caused the dizzy heights of the prices we saw in 2021. Although we've coming out a mini property boom in 2021, the important question is what's going to happen to the housing market in 2022? Well, before we can understand that, we need to take a few things into consideration. The key one being that we're not really back to a normal property market. What's that mean? Well, it means it's not really a flat normal market where we can see what's happening, where the market's going, and really be able to predict what's coming over the next few months. The first thing to remember is the property market hasn't turned back to normal in terms of it's not a market where we can see what's happening over the coming months. There's still some uncertainty in the market right now. Although we saw a huge number of properties being put on for sale at the end of December, this is not unusual. This is normally common practice, and we'll see a little spike in January. The other more important factor to really consider is inflation. The official figures are inflation is running in excess of 5% right now, which is the highest it's been in 10 years. But actually, if you've tried to fill your car up with fuel recently, or been buying your groceries, or that you've been paying your utility bills, you know things are probably costing a lot more than 5%. In fact, if you're active in property right now, you're doing repairs, building, renovations, or even building homes, you'll know the cost is significantly more than 5% in terms of an increase that's happened. Now, inflation for the economy is never a good thing. That means things are just becoming more expensive, which means people are having to pay more for things. As a property investor, we can really benefit from inflation because of long-term increase in values and growth. In fact, if you want to see a video on that in terms of more detail, we'll link that up here for you to watch afterwards. The main tool that the government uses to control inflation is interest rates. Now, interest rates have been a very low rate for a very long time. In fact, since the last time we saw a huge recession, which was back in 2007, 2008, interest rates reduced significantly to the all-time low. Now, they've been at a very low rate. However, in December, we saw the first increase in those interest rates. They increased from 0.1% to 0.25%. So a tiny increase. Interest rates are still, Bank of England interest rates are at 0.25%. Now, when you look at it like that, money has never been so cheap to borrow. However, what the government and the Bank of England are saying, this is the first of many steps to start trying to get to a period of normality. Now, interest rates can't increase very quickly because they'll also drive the economy straight into recession as well. So they have to be in small steps, but it will certainly have an impact in people's affordability in terms of how much they can borrow. Let's put that into some kind of context. So a £200,000 mortgage on an interest-only payment at 2% would be about £333 a month. However, if interest rates were at a more normal rate, which they were historically, say around 6%, that mortgage would then rise to £1,000 a month. That's a massive increase. This is how essentially the government controls inflation, by reducing the amount of money we have available in our pockets in order to spend in the economy. One of the ways affordability is measured is using the UK house price income ratio. And what that does is looks at the average value of a property and how many multiples of an average income that is. So during 1980 to the year 2000, it was typically running between 5 and 6 times. So 5 and 6 times a typical salary would be the value of a typical property in the UK. During the year 2000, that jumped up between 8 and 6%. And at the moment it's floating around the 8%, which is the highest it's ever been. Now, when you take that into consideration, that means a typical property value is 8 times that of a typical average income. But those are the official figures. When you look at the average income in this country, it's about £26,000. But when you then research the average value of a property right now, that's about £269,000. Well, if you do the maths, you work out that's running at about 10 times. That's exceptionally high. It's never been that high. The question is it sustainable, and can that push down the value of property? Most of the official research being released right now, such as Rightmove, Zoopla, the leading lenders, Halifax, Nationwide, people like that, what they're suggesting is that we'll continue to see house price growth, but steady growth during 2022. Single digit growth. Some are talking about in the region of 3%, going up to 7%. Personally, I think it'll be more at the lower end. I think we'll see steady growth. But the factors that we're talking about right now, which is inflation, affordability, interest rates, they're going to be the key thing that's going to determine what happens to the property market in 2022. So are we going to see a property crash in 2022? Well, personally, I'd say it's highly unlikely that's going to happen right now. With everything that's going on, I think we're going to continue to see those price rises, and a crash is never really good for anybody. What will happen? It creates a massive amount of uncertainty. It goes into a recession. Ultimately, what happens? Lenders retract their product. They stop lending. So people can't really afford to buy even though property is really cheap. I'd love to know what you think is going to happen to the property market in 2022. Put it in the comment section below. I promise to read all those comments and I'll answer as many of those as I possibly can. If you've enjoyed this video, you're really going to like the one I've got lined up over here for you, which is on the 18-year property cycle I recorded recently. And if you want to see some of my other commentary on what I thought was going to happen in the property market in 2021, I've got playlists for you just down here. But just before you go and watch any of those videos, make sure you click on my face down here to subscribe to the channel. And I look forward to seeing you on one of these 2 videos.